The purpose of this video is to go through the Fannie Mae and Freddie Mac COVID transition waterfall. So there's been a lot of information put out around these. I'm addressing the waterfall requirements that are as current as August 31st, 21. So today's September 2nd. So this is the most current information that's out there. So if you have a Fannie Mae or a Freddie Mac loan as your investor, sometimes it's called the enterprises. That refers to kind of both of them. This video is going to just tell you kind of how your investor will review you for the different options available to you when you're trying to transition off of your COVID forbearance plan. And what's important to understand is a waterfall is truly a tiered options plan. So it's not as simple as calling your lender and then just saying, oh, hey, I pick this option, right? If you're trying to transition off of a COVID forbearance plan, you don't just get to call your bank up and say, hey, I choose the deferment option, right? What the bank will do is they're going to review you in order of things that are kind of most beneficial to them and then kind of like most beneficial to you at the very bottom. The reason being, banks want their money as fast as possible, and they have instituted these guidelines in a way that kind of start at the top at kind of the most expensive option for you, where you can repay the bank in the quickest amount of time possible. And then if you can prove that that's not affordable for you, they move you down this waterfall tier. So the first thing in the Fannie Mae Freddie Mac tier is a reinstatement option. There are videos on this page about what a reinstatement is, things to watch out for, how to do a reinstatement. But a reinstatement just basically means you pay back everything you owe all at once, at one time, and then you become current on your mortgage and you just resume making regular payments. Now, very few, if any, people can actually do this. If you went on a COVID forbearance plan, you probably went on a COVID forbearance plan because you were having trouble making your mortgage payments. So it's a little bit humorous to me that banks want to consider a full reinstatement. If you can pay thousands of dollars at once, you probably didn't need to go on that plan. So probably that's not going to apply to any of you out there, but there will be a few of you who, for whatever reason, have the funds to do that. And so if that is describing you, reinstatement can be a low maintenance option to just pay back what you owe, stop having to deal every month with the bank, and just make your regular mortgage payments. If you are going to reinstate, make sure you get a reinstatement quote in writing, make sure they tell you payment instructions, and I really urge you to watch my other videos about reinstatements because it sounds easy enough, but sometimes there can be issues. The worst thing you can do is to just send randomly money to your bank and like hope everything goes well. Watch the other videos about reinstatement. So after Fannie Mae and Freddie Mac see if you can afford a reinstatement, which most people can't, they will then move you to the repayment plan option. There are videos on this page in detail about repayment plans, but generally a repayment plan is a way for you to resume your regular mortgage payment and pay a little bit extra every month until you become current on the amounts that you missed. So in theory, repayment plans sound good. In actuality, they can be very unaffordable because the extra amount on top of your original mortgage payment is often very high. What I'm seeing on the ground when I'm going through these with homeowners is that the repayment plans people are being offered have mortgage payments that are almost double their original payment. And so most people can't afford to pay 2 mortgage payments per month or close to 2 mortgage payments. Repayment plans are not loan modifications. They're literally just a way to resume regular payments and pay a little bit extra with that extra amount tacked on there. If you are in a good financial position where a double-ish mortgage payment sounds good, a repayment plan might be a good option for you. You can just kind of quickly pay back what you owe over a course of time and then resume with your regular mortgage payments. So if you can't reinstate and a repayment plan is not affordable for you, Fannie Mae and Freddie Mac will then consider the payment deferral or deferment option. The word is being used differently. Sometimes I'm hearing deferral and sometimes I'm hearing deferment. But deferral and deferment kind of mean the same thing. It's very similar to the FHA or VA partial claim option, but basically this option takes the amount of money, the total amount of money that you missed during your COVID forbearance, and it kind of creates what looks on your title report like a subordinate lien, or it looks kind of like a second mortgage, and it becomes due at the maturity date of your loan. So you don't pay anything toward the amount that you missed on your forbearance. It's non-interest bearing, it doesn't collect fees, it just kind of sits there, and then if you do something with the property like refinance or sell it, or if it matures, then you have to pay that money back. Your mortgage payments will then resume to their original amount, the amount that they were before COVID, and you'll just kind of move forward in this manner. So I'm seeing a lot of these deferment options being good options for homeowners, for people who truly have financially recovered to the point that they were before COVID. So if you're making the same money, if everything is the same in your household, a deferment is a good option. It allows you to just kind of resume your regular payments and deal with the amount that you miss with your forbearance later. If a reinstatement, repayment plan, and deferment isn't working for you, what that probably means is that your household financials have not recovered enough to the point that they were before COVID. And so at this point in the waterfall, Fannie Mae will consider you for what they call a flex modification. It's Flex just means that's Fannie Mae and Freddie Mac's name for the modification, but it's essentially a loan modification program. The reason why somebody would consider a loan modification program would be to see if they could take advantage of a lower interest rate and an extended term that might lower the monthly mortgage payment a little bit. Now, when you hear the investor representatives for Fannie Mae and Freddie Mac talk, they say things all the time like, oh, the payments will get lowered a ton, you'll get a way lower payment. It is true that some of the payments come back lowered, but they're not substantially being lowered. You might drop an interest rate. You know, if you were at like a 5.5% interest rate, your interest rate might drop from there to 3%, which is good. Don't get me wrong. Your payment might drop a couple $100 a month. But a flex modification is what you'll want to look at if you need kind of an adjusted payment that is lower than it was before COVID. The reason they're offering this is to try and help people who have not fully recovered. And so the flex modification comes after the deferment. And you can kind of see the difference, right? The deferment is for people who are totally good to just make their regular mortgage payment. They just can't deal with the forbearance amount that they missed. And then the modification writes a new principal balance. It has a new interest rate, it has new monthly payments, and you kind of start a new agreement with your bank with new terms. After the flex modification option, Fannie Mae and Freddie Mac include two alternatives to foreclosure about getting rid of the home. That would be a short sale and a deed in lieu. If you at all have questions about short sales or deed in lieu, there's videos on this page about what those are. Those are basically options for people who have not recovered since our COVID forbearance. They have no view on the horizon of when their income will recover, or they're looking in some way to kind of get out of the home. And so Fannie Mae and Freddie Mac has included these two options as alternatives to foreclosure. So definitely, if you have questions and you know you want to get out, watch the videos on my page about those other options. I'm not going to get into them in too much detail here because most people right now are having questions about how do I just like solve the forbearance issue, get back current, and just resolve everything and move forward to stay in the home. But if you want to get out, there are tons of options there that are kind of like liquidation, loss mitigation options that you can look at. Good luck.